The total non-farm payrolls just came in and the numbers were shocking. The jobs report was actually significantly better than what was expected. But here's the kicker. How was this data collected? Because all of the data was supposed to be put on pause when the government was shut down. And we've seen previous huge revisions in the jobs number specifically that lead me to believe that there's some hairiness behind all of these job numbers that just recently got reported. And on top of it, we just saw a huge percentage crash on the amount or on the potential of cutting interest rates here in December, all because of what came out with these job numbers. But first, let's of course dive in to what we've got with the job numbers and listen to the report from CNBC this morning.
This is the September jobs report. Non-farm payrolls are up a robust 119,000. 119,000 would be the best since April when we were up 158,000. In the rearview mirror, well, last month was downgraded from 22,000 to minus 4,000. Now, if we look at what's going on with the unemployment rate, it ticked up from 4.3 to 4.4. That was unexpected.
So you see the unemployment rate ticks up, but all of a sudden the jobs report has added 119,000 versus that 50K expected. And the federal jobs were down 3,000, which I think is interesting. And the December rate cut odds fell to just 27%. So the U.S. Labor Department announced it will release the November employment situation at very interesting particular timing, 6 days after the Fed meeting on whether or not to cut interest rates. So I think this is all very connected on where we are going, right? So we are starting to see the Federal Reserve now having to make data-driven decisions without any data. And let's face it, all of this data has always been backwards looking. I've been saying it for time and time again on this channel. So make sure you guys are hitting that subscribe button for me so you can join the chat. But I've always been telling you guys that the problem with all of this data collection is that it is backward looking. We don't have anything to have it for the forward looking. And on top of it, we always see significant amount of revisions, especially in the jobs data. Now, the September jobs report, it showed that it added nearly 120,000 jobs, where economists believe that we would only see about 50,000. But the interesting thing is the unemployment percentage raised by 0.1%. And I know that doesn't sound like a lot, but this is unexpected. So we have unexpected jobs added and unexpected unemployment jobs increasing. Now, the funny thing is that I think that we really have to always take a look at how these job reports are made, especially during what we just saw of this government shutdown, because the belief was that the Fed was not going to get these numbers, or, they're just getting the privatized numbers opposed to the real, numbers that are normally proposed every single month. And so when we're looking at this and saying, hey, during a government shutdown, most public reports stop being produced because data collection and publishing are quote unquote non-essential activities. Now, some emergency essential functions can continue, but these job numbers were not considered essential. And what we've seen, as I've said to you guys before, we've seen major revisions stating that the U.S. literally added nearly 1 million fewer jobs, 911,000 fewer jobs. So I think that you have to take a very close eye with all of this. And it is very interesting on what we have here, because with the amount of jobs that keep getting revised, how can we potentially look at and say, hey, you know what? The jobs numbers are strong. We should actually cut interest rates or not cut interest rates because the job numbers are strong. Make the decisions based on these numbers when we keep having to revise months and months and down the line. And, Trump actually did fire the last person who was in charge of this data collection because of how big the revisions were being made. But the interesting thing of all of this is that just because you fire somebody doesn't mean that these numbers are going to be now better in the future, right? It just means that the person reporting it, okay, they had an inefficient way. They haven't come up with an efficient way to collect these job numbers, right? I mean, if you look at ADP numbers, which is one of the bigger privatized numbers, I mean, you get such variations in the job numbers specifically that it's extremely difficult to tell just how good the consumer is doing or just how bad the consumer is doing. And so making these decisions, well, these policies and decisions that they're going to make are very forward looking. So we won't see the effects of these interest rate cuts until we get down the line. And so when we don't see the effects of these interest rate cuts until 6, 12, 18 months down the line, well, it's all revisionist history. And these numbers keep getting revised down and down and down. And these job numbers keep looking worse and worse and worse. And so it begs a question: should we cut interest rates or should we not? I'm of the belief that, when we still look at the inflation numbers, we still keep a very close eye on what is going on economically. Well, there's an issue here, right? There's still not, as strong of an economy as we originally think. And if you look at the housing market, you look at all of these things, the consumer isn't as strong as these numbers might lead you to believe. And so this is where I think like it can get very interesting because, I personally think that we're going to start to see a lot of market volatility. And, we see during this opening bell here, it fell 2.5%, turning negative on the day as crypto collapses, right? I mean, it's funny because they're always pointing to the crypto markets, which of course have a lot more volatility. Of course, I'm just Bitcoin only. But I think it is interesting that when we're looking at how these, companies are starting to perform, well, we're going to start to see some volatility in the stock market. And maybe, just maybe, we're entering some sort of a bear market because, we're starting to see the forward looking aspects of the US Labor Department, all of these gains. And what we did see is that based on these job numbers, we're starting to see a lot of positive stuff here, right? From the stock market. We're starting to see futures extend gains with the NASDAQ 100 up, September jobs report. Fed chair explicitly said that he is watching the unemployment rate more than the headline jobs number, which I think is interesting because we saw the unemployment rate go up. So we see the unemployment rate go up, yet the chance to cut interest rates is going down. We've seen it as low as 28%. Of course, it got up a little bit after the initial crash down to 28%. Now we're starting to see it up at 41.6%. But it looks like in 21 days or so, 3 weeks, that the Fed is not going to cut interest rates. And it's interesting, right? Because, we're starting to see, like yesterday, it was at 30%, right? So the a chance that the Fed is going to cut interest rates is still below that 50%, and it looks like it's going to stay there. It looks like in the next 3 weeks, unless we start to see some really negative numbers, that the Fed and Jerome Powell are going to hold strong. And it's interesting because even with the dollar having its worst start to the year in 50 years, we're just cracking over 100 in the Dixie, which I think is a positive because we wanted to see the Dixie have some sort of strength relative to all of the other fiat currencies. And finally, we're getting there. For those of you guys who've been following this channel for a while, know that I show the Dixie on almost every live stream. And this is the first time that we're seeing it over 100. So this is a positive when we're looking at the strength of the dollar. But if you look at the strength of the dollar and then you compare it to the strength of the S&P 500, well, we literally woke up to some big old red candles today. And so there's a lot of negatives here today, especially with this crash and burning of the stock market. But I think, this is just a sign that the market has been overvalued for quite some time, and we're finally starting to get some revisions back to the means. So, as All Nighter Hider in the chat is saying, no matter what the Fed does, it's going to be wrong simply because it's not natural. Natural incentives are greater than unnatural. And I agree, right? I mean, I think, after replacing Jerome Powell, it's not necessarily going to be, a potentially a positive because he's going to want to keep interest rates a little bit higher, which, I think a little bit of tension in the market is good. But, we're starting to see, some things starting to crack. And I've been pointing out all of this for a while. So unemployment is its highest since October of 2021. So that would point to the Fed wanting to cut interest rates. But everybody is looking around and saying, hey, you know what? I don't think that that's going to be the case. So it is very interesting, the development of all the way that this is going to play out, because I think, the strength of the stock market, the strength of the US dollar is heavily reliant on what we do with these policies. And it's all short term at the end of the day because the markets are very forward looking, which is interesting because the market's forward looking and they look at things that happen, and the decisions that are made are looked at for data that's backward looking. So this is why when humans are making these decisions, that it seems like they always get it wrong. You could always point your finger and say, you should have done this, you should have done that. Revisionist history, right? But at the end of the day, I still believe in the US economy. I think it's going to be very strong in the long run. I think this is all lining up for a lot of short-term market volatility, especially to close out this year. And I want to be looking at that very closely. So make sure you guys are smoking that like Cheech and Chong. Shout out to All Nighter Hider. Hit the subscribe button with the bell notification so you guys know when I'm going live and you can join him in the chat. I'm going to keep it short and sweet, so I'll catch you guys all at the next one.